Hello, everyone, and welcome back to Sudden Wealth. I hope you guys have some good plans for the weekend and that you had a good rest of the week. If you do enjoy the content, please consider dropping that like and subscribe. The channel has been growing extremely quickly ever since I started posting on a daily basis. By the way, next week I already said I'm going to be traveling for business. I'm actually considering potentially a live stream on Tuesday or Wednesday. So let me know what you guys think, if you'd like that or not, and we can go through some of the things that we usually discuss here in the channel. Now, I would like to start. Obviously, today it was a very green day. Bond market went up. Stocks went further up. Gold is a bit under pressure because it's time to sell off on that asset. And crypto, for the most part, also did very well. Still, selling off a little bit into the close, but nothing special. Now, what the Fed did yesterday, and if you guys recall, during the beginning of the year, in January or so, I made a video with, out of all the noise that comes out from the media, from the market, from YouTube, from all of that, what would be the two big things to pay attention to? Number one is the Fed stopping QT. If you guys don't know what QT is, means selling bonds, which they already did, and they reinforced that position yesterday. And number two, and by the way, the biggest rises we've seen in 2024 is exactly after they've talked about stopping QT, as somebody predicted here. Then the number two is going to be the start to see on job reports the increase in productivity, especially on the second half of 2024, coming from AI. So that one we need to wait for a little bit more, but I get the feeling that some of the innovation that we're going to see is going to be quite interesting to bear witness. Now, that last year I've already talked ad nauseum about this, but I will say it again. The job market in the US was never strong. The headlines were saying something like, the US just created 400,000 jobs, and only 280,000 were expected. So a major beat. Yeah, but then when you open the report, you see that full-time jobs are going away, bye-bye. Part-time jobs are coming in. Now, do you prefer having a full-time job or a part-time job? Full-time job. Number two, what kind of jobs are these? Mostly, retail, sales, restaurants, and this kind of stuff, and government, which is the worst because it's the most unproductive of them all. Number three, who's getting these jobs? Are these new people that were unemployed and are coming to the market? Are these people that have given up looking for jobs and coming into the market? Or are these people getting second and third jobs? There are people getting second and third jobs. But is that a sign that the economy is strong? Or is it a sign that one job no longer pays the bills? Nobody's going to work three jobs on purpose, right? They're going to do it because they have to do it. It's not a choice. But of course, today, and then I've mentioned at the time several times that it's a matter of time before the weakness in the job market report itself will start being visible on the headline reports as well, which is exactly what we had. And this is great because the market is now pricing in further rate cuts. Why? Because the job market is softening, inflation should soften, and even if it doesn't soften, the Fed needs to support the economy. So they will. So it's basically a green light to print money, which means bonds go up, which means stocks go up, which means obviously crypto goes up. Once again, it's just evidence that our internet made up imaginary money is better than the government's internet made up imaginary money, because theirs inflate forever, and they have a vested interest to inflate it forever. Now, does that mean that I no longer think the Bitcoin will go to 47 to 52K? Actually, I still do. And what we are doing today, basically, we are testing the SMA 9 on the day. That's all we're doing, and the SMA 10. So far, we bounced off of it. Now, if this is the bottom, let's say for argument's sake, we hit 57, and that's it. That it was the correction. So instead of having the typical 38% correction like we used to have, now we only have a 20% correction, and we go up into the right. Sure, that can be the case. If that's the case, great. I'm already very well positioned on everything. So I really don't mind if that's the case. However, I still think I'm going to be correct on this one, and that we're going to see a 47 to 52K Bitcoin. Now, that doesn't mean that we're going to stay there for 3 weeks. No, probably going to stay there for a few hours or a day or so, and then that's going to be it. After that, it's only going to go up. Once again, what did I say? April 2025, to me, is the key. The global liquidity cycle. If you guys want me to discuss the global liquidity cycle, let me know, and we can do it. But it's going up and up and up from here. That means that liquidity is going to get pumped into the system. With inflation, without inflation, that doesn't matter. It will come up either directly, so the Fed will admit to it, or will come hidden. That's it. And you see that, for example, when the banks were going bankrupt in March of 2023, they didn't print money, right? No. They injected an emergency mechanism to stabilize the financial markets. Yeah, they pumped money. That's all they did. But you cannot tell that when inflation is high. So you need to come with a lot of words to say the same thing, which is exactly what they did. And they will do it again and again as many times as needed. So I do still think that we have a lot of bull market to go. To me, I'm looking at the fundamentals the most. I'm looking at the fact that now the new Bitcoin supply per day is only 450 new coins. The fact that the majority of the US ETFs are actually net buyers of Bitcoin, with the exception of Grayscale, which has now sold more than 50% of its holdings. You see, this is the part that is important for people to. And by the way, the problem with Grayscale is that their expense ratio on the ETF is much more expensive than the others. So if you buy BlackRock, it's going to cost you, I don't know, like something like 0.07%, something minimal. But if you buy Grayscale, you're going to pay 1.5%. Now the question becomes, why would I pay 1.5% if I can buy the same thing at a fraction of the cost? The answer is you won't, which means the holdings have been decreasing, which means Grayscale is selling more than $100 million of Bitcoin almost on a daily basis, sometimes actually above 200 million, sometimes almost approaching 300 million. Now, there are good news about this one because they've been the biggest seller on the market. And there are two things that will remove them as sellers. Number one is they are deriving another product, which basically reduces the costs of buying Bitcoin dramatically, which means no more selling. Number two, this is more important, let's assume they sell all their coins. They already sold more than 55% of them. Once they sell, can they hurt the price? No, they already hurted it, right? So that's my point. Once you exhaust the seller, you only have buyers. What is also interesting to note is that both the spot ETF for Bitcoin and Ethereum are already having substantial net inflows in their first week in Hong Kong. So in their first week, we saw almost $300 million of net inflows for Bitcoin. That is great. That's exactly what you want to see. Maybe you're going to have a few more of these ETFs in the region, maybe from Singapore as well. And all of a sudden, you remove the biggest seller, you bring in substantial new buyers, you do the math for yourself. So I'm still extremely bullish on Bitcoin for 2025, which means Bitcoin somewhere between 242,000 to 276,000. I will clean out those numbers a bit later. Extremely bullish on Ethereum. Oh, by the way, I did see the video of Michael Saylor saying that Ethereum will never be an ETF, will never be made into an ETF because it is clearly a security, blah, blah, blah. And a lot of people were now concerned about that. Look, Michael Saylor is the saint of Bitcoin. His bags are Bitcoin. Which currency can realistically surpass Bitcoin in this cycle in terms of market cap? Ethereum. How could you do it? With ETFs. So are you expecting him to be all excited that the main competitors of Bitcoin, of his bags, will potentially get an ETF? Now he's making a bet against BlackRock, against entities that already declared Ethereum a commodity, like the CFTC, like Gary Gensler. In one of his lectures, if you find it on YouTube, he called Ethereum a commodity. So this actually shouldn't even be a debate anymore. So in my view, in August, you're going to get the Ethereum ETF. And with that, the entire Ethereum ecosystem will pump. And also the altcoins will pump. In the meantime, we may have some more troubles ahead. To me, probably the last bus stop since the real until the real bull market. If I'm wrong, and we just go straight up from here, that's great. I'm already packed and ready to go. For stocks, is what I've said. As soon as you stop QT, as soon as you signal that from now on you'll stabilize the bond market, that's all that matters for stocks. That's it. There's no reason to make it more complicated. Oh, does that mean the stock market cannot go down? Yes, it can. 5, 10, 7, 12%, 15, 20, even 30. But most likely not more than that. And with that, guys, I'll leave you be. I wish you some good end of the week. Hopefully you have some plans for tonight and tomorrow. And I'll catch you in the next one.